Factory, and I'm here to let you know that I'm going to be one of your community partners, and I want to earn your business to be your banker. At Fifth Third, just to give you a little bit of background, Fifth Third Bank has been around for over 160 years, and we're currently expanding here in the Triangle. So we started with 4 branches, now we're up to 19, and by next year we should have about 30. So that just makes banking more flexible and convenient for you. And I know that being small business owners, you're really great at what you do with your business. I'm here to help make banking simple for your banking needs. So I'm going to be going over some slides where I'm just going to give you advice on how to make things just easier for you on a day-to-day basis and kind of streamline your business. But just a little bit about myself. I've been in the financial services industry for over 21 years, and I'm really passionate about providing financial education. I've been involved in the community, and I've done a lot of budgeting classes, credit classes, such as boosting your credit score or paying down debt and things like that. So today I'm going to be covering how important it is to really choose the right bank that you're going to partner with. So you have to take these things into consideration. What are your business's unique needs? Does the financial institution have a good track record, if any, of providing services to small businesses? And how important are non-financial considerations? What fees may be associated with the financial institution's accounts, products, and services? And is the financial institution insured? So, of course, we want to earn your business here at Fifth Third, but just think of wherever you're banking right now, how often does your banker reach out to you, follow up with you, find out what's important to you, and set some financial goals. So I also wanted to talk about the importance of separating your personal finances from your business finances. So one of the things that I really encourage my small business customers to do is really separate them. So your personal account should be all your personal expenses, your bills, and your personal savings, right? But you should have a separate account, a business checking and a business savings, specifically for your business. So your tax preparer or CPA will thank you for that, because it's going to be so much simpler come tax time. And it's also less stress for you. You don't have to look for things. Everything is completely separated. The great thing about Fifth Third Bank is that we do have a lot of promotions for both our consumer banking and also our business banking. So let's start with the business banking. Initially, you would have to maintain $3,500 into your business standard checking account at Fifth Third, but we really wanted to be competitive in the market space and make it easier for our small business owners. So now, effective November of 2022, there's no more balance requirement and there's no monthly service fees. You can come and see me at the Hayes Barton Financial Center, and I'd be happy to establish your business standard checking account. And if you have a checking account, then the business savings is free as well. So you don't have to stress about, I have to maintain 500 or 200, and you don't have to worry about setting up automatic transfers to the savings to keep it free. So really, there's no hassle, and I'd be happy to help you with that. I can print out all of your paperwork that you need from the Secretary of State. You'll just need to basically give me your EIN number, and I'll create your profile for your personal profile and then your business profile, and we can establish a checking account. It's really easy. And you know, as far as our consumer or personal checking and savings account, we have something called momentum banking. So what that is a program where it comes with a checking account. There's no balance requirement also. There's no monthly fees, and there's no fees for using our partner ATM All Points. So there's 50,000 ATM locations that you can use throughout the U.S. So again, basically, select a picture, select a goal, nickname, an amount, and a target date. So it'll help you keep organized with your finances, what you're saving for, what your goals are, and it's just easier to make automatic transfers to those savings accounts. So another thing that we have for our personal savings account, the Momentum checking account, is that if you haven't had a checking account with Fifth Third yet, you get $300 for opening a checking account with us. So my specific location at East Barton just opened on December 28th of last year. So we're trying to earn everyone's trust and get you to come to our branch and do a tour, and we can show you how we do banking differently at Fifth Third. And immediately once you come to the branch, you'll see that it looks like, some people say it looks like a bar or a living room, because we want you to be comfortable coming into our space so that we can give you financial advice. So when you go to other traditional branches, sometimes people feel kind of intimidated or scared to ask for advice, especially when they own a business. How can I get credit for my business or capital for my business? Are they going to turn me down for a loan and things like that? We don't want you to feel like that. Please come and visit us at our location. And we also have a lot of different partners that we work with that will be accessible to you. So Brian is going to be talking more about his role, but he's our mortgage officer. And we also have Joey, who is our WorldPay or merchant services partner. He can help you set up your credit card machine so you can accept credit card, debit card payments to make it easier to run your business. And again, I'm just covering the basics today. If you have any questions or concerns, I do have my business cards that I'm going to be leaving here at the factory, and as well as our $300 bonus offers. And our location is located in 1641 Glenwood Avenue, and we're looking forward to this continued partnership with the factory and Black Dollar NC, so that we can support small business owners, and that's what we're really passionate about. So looking forward to meeting all of you and answering some of your questions. Thank you.
Good afternoon. I'm Brian Summers with Fifth Third Bank. My title with Fifth Third Bank is Area Sales Manager. And a part of that is working with the community with Fifth Third Bank, encouraging small business owners like yourself to understand the mortgage side of what you can do with your business. As a small business owner, at times you may want to go into a commercial program and eventually buy your own building. Typically, as a small business owner coming out and establishing your business, you're going to be leasing that property to a point where you can afford to go ahead and purchase it. So I'm going to talk about some of the product line as far as purchasing a primary home, because every business owner, every individual, needs a place to live. And if you're renting, what you are doing is paying someone else's mortgage. So it's not helping you to become wealthy in your own right. So what we want to do is establish that mindset to help you understand the importance of wealth and how we can help you build upon that structure. So self-employment is a really tricky thing when it comes to mortgages, simply because the W-2 employee has that income that's pretty much, as long as they're there.
All right.
Okay, I think we're back. So we were talking about self-employed borrowers. How can a self-employed borrower increase their prospects for a home purchase? Self-employed borrowers' income may go up, may go down, depending on the type of business that they have. if they're working with clients. This, as an example, if you're a barber, so that barber coming out of barber school has to build up a pipeline of clients that they see on a weekly basis. It may take them a minute, a while to establish that pipeline. If an individual gets his hair cut, he doesn't like the way it's cut, he's going to go to find another barber. So that income may not be established with that individual as long as he wants it to be established. Are we good, Trisha?
Yes, that's loud. Sorry about that.
That's fine. So what can that self-employed borrower do to make their application look good to an underwriter? One is the down payment. So if you're self-employed, you are going to need a larger down payment than an individual that has a W-2 income. So that will help you to have a much stronger application when it comes to your primary home purchase. So what would be a typical down payment for a self-employed person? That would be a minimum of 20%, a minimum of 20% down. And you can do the math on that. If you're buying a $300,000 house, you know, you're looking at 20%. You know, that's a pretty good down payment. But that would be something that you would need to consider if you're looking as a self-employed person. Number two is looking at credit scores. As a self-employed person, what you want to look at is a minimum of 680. That would be the bare minimum going into a home purchase. Now, if you're a W-2, you can get into a home at 620, 640, so you can see the difference, the 680. And actually, what that underwriter would like to see is a 700 to 720 credit score for that self-employed person. So there are a lot of guidelines that are heavy for the self-employed that are not as an overlay for that W-2 employee. So please remember that. We talked about down payment, we talked about credit score, we talked about a larger down payment. The third thing I want you to know is paying off debt, which is really important. So we have a ratio called a debt to income ratio. The debt to income ratio we want to see at 43%. 43% of income minus liabilities. So what you're paying out every month. So that 43% would include the mortgage payment, which would include the taxes and the insurance on top of the principal and the interest, and then the revolving debt that you're paying on an ongoing basis. So 43% is the maximum that you want to look at if you're self-employed. Now, how do we get to that 43%? What we want to focus on is paying down as many of the credit cards as you possibly can, or any additional debt that you may have that you can pay off. These are some of the strategies that you want to look at when you're preparing to buy the house. You don't want to do it when you are in the midst of buying it. So you want to make sure you back up and have plenty of time to look at where you are financially, so that when you are ready to move forward, all those red flags are taken care of. So one problem that we find with self-employed individuals is that on the tax returns, what they're going to do, and typically everyone that is self-employed should be doing this, is writing off expenses. So you can make $100,000 a year as a self-employed person, and if you write off $90,000 of that $100,000, you're left with $10,000 worth of adjusted gross income that the lender is going to look at for you to purchase your home. So think about that. You got $100,000, you can buy a lot of house. Now you're down to $10,000. How much house are you going to be able to buy? Very little, if anything at all. So the strategy for making sure that you're in the position to purchase is you need 2 years of employment income history. 2 years. And so when you know that, okay, I think I'm ready to start looking at my primary purchase, you need to make sure you back it up 2 years so that when you do your taxes, you're paying or you have enough adjusted income to support the house that you want to buy. Okay? It's not to say that you can't write off income, but you want to show enough income to support the home that you want to buy, whether it be $300,000, $400,000, or whatever that number may be as a comfort level. So you can work with your lender to figure out what that number will be. What I do with my self-employed clients, if they can afford a $500,000 purchase, I recommend that they look at a $400,000 purchase. Why do I do that? Because they're buying under their ability of what they can afford. This gives them much stronger position when it comes to qualifying. The debt ratio is lower because we're looking at a smaller price home. The down payment is lower. All those things are lower. Okay, even though they can afford to buy a more expensive home, we don't want to push it to the ceiling because it gives that underwriter an opportunity to say, yes, they have reserves, they have a lower debt to income, they have less debt that they're paying, so it's easier for them to make that decision to approve that particular self-employed person. So, types of programs that a self-employed person can look at. The conventional is the biggest guy out there as far as a self-employed person. It's easier for that self-employed to go with a conventional mortgage, but there are other types of mortgages that the self-employed person can obtain. If they're a veteran, they can use their VA ability to buy that home. And if they are FHA, they can use an FHA loan. The problem with FHA is that it has mortgage insurance. And even if they put 20% down on an FHA program, they will still have that mortgage insurance for the term of that particular product. And by term, I mean if they get a 30-year loan, 30-year term, then that mortgage insurance is attached to that term for 30 years with FHA. So that may be a hindrance or may not be attractive to a self-employed person. So they may want to work and say, well, what do I have to do to get a conventional loan where they don't have all of the overlays that are required for some government types of loans? All right, so we've talked about setting our self-employed person up to get an established approval. We talked about the debt to income ratio. We talked about the down payment. We talked about the track record, the 2-year track record, which is required. It's important that the self-employed person have that relationship with their lender prior to them going out and looking at houses to purchase. They want to establish that relationship so they can come in, figure out where they are. We can make a plan for them so they can get into their home without a lot of stress. They say the biggest stresses with anyone today, one is death in the family. You lose a loved one. The second could be the stress of a divorce, and some may find that to be, no stress at all. The best thing in the world ever happened to me, but I'm not going there. And the third thing is purchasing a home. That is stressful, can be stressful, simply because all of the documentation that's required to purchase. So what we do when we work with that self-employed person, we let them know the documents that are needed for that purchase. The income documentations, the profit and loss statement, all of the, if it's a corporation, all of the corporation documents, all of those have to be submitted, reviewed. We help that person to submit it correctly so that we can go ahead and help them get the stress level down. So if we do that when we're far out versus you know, I got to close at this particular day, that stress level goes tremendously down for all parties. So when you are out and if you are thinking about purchasing a home as a self-employed person, the more time that you can work with your lender, the better. So you can never start soon enough. And I think I'm going to conclude this by stating, is it possible for a self-employed person to get a mortgage with a joint co-borrower? Yes, they can. So self-employed person may be married, so they can combine their incomes, make it easier. That co-borrower may be a W-2 employee, which makes it easier. As far as income calculations, those things are important as we look at the self-employed as a total person. So, can you get a mortgage if you're self-employed? And the answer is, I'm going to ask the audience.
Yes.
Yes, you can. Is it harder to get a mortgage if you're self-employed? Audience? Yes, it is a little bit, it's a little harder. How much income history do I need for a self-employed mortgage? How much income? 2 years. 2 years income history. And are self-employed mortgages more expensive than a W-2 mortgage? This is a little tricky. Is it more expensive?
More money out of pocket up front.
More coming out of pocket, more down payment, more paying off debt. So it is a little bit more expensive as a self-employed person. So what is the most important thing that a self-employed person can do when they're thinking about purchasing a home? The number one thing that they should do. Yes! Absolutely, absolutely. Sooner than later. They need to make that. If I had a candy bar, I'd throw it at you. You got it going on. So, but absolutely, guys, thank you so much. This has been a joy. Hopefully you've learned something about self-employed and buying a primary mortgage, what it takes, what we can do to help you. Thank you very much.